Good afternoon and welcome to NYFP. In midday and midweek trade, the major U.S. stock averages are holding on to session gains ahead of the Fed. Joining me now is Warren Meyers of DME Securities. Warren, good afternoon and thanks for joining me today.
My pleasure. Glad to be here.
Well, we opened up higher and the equity averages are holding on to those session gains. It looks like for now the Cyprus concerns are being sidelined as all eyes to turn to the Fed. What do you expect to see this afternoon after the rate decision and after Bernanke's speech?
I expect pretty much status quo. I think the rates are going to be held the same, so there are no surprises there. I think what you're going to see is moderate growth in certain areas. They probably point to the housing is continuing to improve. The jobs, though, are still an issue, even though the last number that we got was a little bit better. It's still a concern and nowhere near their target level. So I think they'll mention that is still an issue that they're following and looking at. Net at the end of the day, I think it's going to be a loose monetary zero rate policy for the foreseeable future. And net, that's good for the equity markets.
And we'll see where we close up today after the Fed rate decision. But I do want to get your take on Cyprus, as this is the first time I've talked to you since we got those developments. It seems as though there's a bit of a sigh of relief after lawmakers rejected the proposal for the bailout plan. But going forward, there's so much uncertainty about what will happen to Cyprus and where they will be getting funds. So what can we expect?
I think what you're going to see is further negotiations, and net, I think the ECB will work with Cyprus to come up with some type of stabilization plan that's not quite as onerous on Cyprus as the initial proposal was. There's also talk that Russia's going to maybe be coming to the aid with a lot of money as well. I'm not sure exactly how that's going to pan out, but net, I mean, even though Europe has been recovering very slowly and having their ups and downs, we haven't heard much out of Europe in the last few months, and this kind of brings the whole issue back to the forefront, and I think that's why you saw a little turbulence in the markets over the last few days. But in my mind, what I'm very impressed with is the way the U.S. markets really held their gains or didn't sell off big on any of the news. There was a little bit of turbulence, but it was like a very small wake in the pond as compared to what we saw a year and a half ago. Whenever there was a rock or a pebble hitting the pond, we were getting those big turbulent moves. This one we got very small moves, and I'm very impressed the way our markets held up.
And Warren, it is amazing to see where the equity averages are. We did indeed see that slight dip lower, but we have managed to sustain the levels in the equity averages. But after the Fed decision, and once we come in tomorrow, we get hit with a slew of U.S. economic data releases and global PMI figures. They will be preliminary readings for the month of March. So heading into the next two sessions, what can we expect?
I think, here in the United States, we have some more housing numbers that are coming out the rest of the week. We're going to have the Philly Fed, which is a lot of people focus in on, and as you mentioned, some of the PMI numbers as well. I think people are a little bit cautious, in particular after the run-up we've had, but when they look for that big pullback to jump back in again, they're finding out that they're not getting that. So I think you're going to see a lot of the continuation of the same. Any negative news might pull the market back small, but no real capitulation, and I think the traders and investors are looking at this and saying, listen, any small pullback, I better jump in, because if I don't, it's going to bounce on me and I'm not going to have an opportunity to get in again. And I think that's why you've seen very muted downside moves and still underlying upward momentum in the marketplace.
And speaking of pullbacks, what are you watching in terms of the S&P 500 futures?
Let's see, on the futures right now we're at 1550. That 1555, 57 range has been a tough one for us to get through. We really haven't pushed through it yet. That's a bit of a resistance on the upside. On the downside, 1542 is a bit of a resistance, certainly 1535 if we go that low. I think today, my opinion is we're going to get a positive continuation, the positive move for the rest of the day after the Fed announcement. So I think they're going to be pushing up towards that 1555 level. The big question is when and if can they break through that, and if they can, next big upward resistance point is around 1575. So there's quite a bit of upside room if we can get through there.
Well, Warren, we'll see what happens after the Fed rate decision, and we'll keep an eye on those levels. Thank you so much for insight today, and thanks for your analysis.
My pleasure. Thank you.